Says I'm live. Let's check the YouTube. Sounds good. Super hyped. I love to see it. And now we just have the 3-day countdown going into halving. I took Segways 101, my friend. Yeah, great to be here, Trav. It's been good. Certainly a lot of news stories circulating right now as we get into the home stretch of the Bitcoin halving. And obviously, there's a lot of bearishness going around with markets retracing 15 to 18% since the all time high roughly a month ago, about 5 weeks ago to be precise. So we are seeing some interesting commentary going out there in the media and through the crowd discussions. Um, but there are some positive signs too regarding whale and shark behavior and how likely it is for us to see a quick bounce once the FUD kind of gets too enormous, and I expect things to start turning around. I can't say the exact timing, but uh, I don't think we will dip much lower as long as sharks and whales continue to look quite bullish themselves, and we'll get into that as we kick things off here. Sounds wonderful. Yeah, we're definitely in the home stretch, so I'm excited to see how this is going to play out. We saw the Ethereum merge about a year and a half ago, for example, being uh, seeing a big run up going into the final 2 weeks of it, and then we saw a dump right as it was happening. We're seeing history kind of repeat itself now, and of course, after the merge happened, there was a couple weeks of kind of everyone shrugging and saying, "Oh, I guess this was never that big of a deal," and then all of a sudden prices take off. So let's see if that theory comes true again. And what I can do is share my screen here so we can get some visuals going on exactly how the possible scenarios can play out. Good point. Yeah, the meta. I was checking the stream. For those watching on the Sandman stream right now, uh, I don't know if Trav's audio is coming in. I think they may only be able to hear me. This is kind of an experimental process going on right now, but we'll make the best of it. And of course, Trav will have your recording after this, anyways, which we could always upload to the Sandman YouTube video. So I'm not too stressed about it. Love it. Yeah. So we look at the last 7 days here. And of course, it's going to be a sea of red, just as most of you would suspect. There are a few outliers. Unicef Leo is actually up about a percentage point over the past week. But you can see just going down here, the overall market cap in crypto is down about 10.5%, while volume is actually up 17%. Bitcoin itself is down a little over 10%, sitting way down at 61.7K right now. Ethereum down, I think it breached 3,000 and is just above it at this time, but I wouldn't be surprised if it falls back down after some of the limit orders finish filling in at that big round number. Solana, especially, has taken a big beating, down 24%. Uniswap, as many of you may have heard, the SEC is threatening some uh, action against them. So they've taken quite a hit from uncertain traders who don't want to be near it at this time. And many meme coins, by the way, are down huge. We can look at them, or the markets, I should say, by watch list. And you can see according to different sectors, liquid staking derivatives down 16%, meme coins down 23%, layer twos down 26, social assets down 32%, gaming 28, real world assets 21, AI and big data 25. ERC20 is surprisingly holding up quite well in comparison to the rest of these, down 12%. NFTs just getting crushed, negative 32%. This is just in the past week, folks. DeFi, 20% drop. BSC and Binance Chain actually doing quite well, only down 4.5%, which is a big win if you have a portfolio full of Binance Chain assets. And then layer one's down a modest 16.5%. So yeah, it's certainly been retraceville as of late, but the question, of course, everyone's asking is, will it continue? Is this a big dip by opportunity? And that's where we want to focus our attention onto whales and sharks and kind of what the crowd is feeling, because prices tend to go the same direction as whale and shark addresses tend to move them, and they tend to go the opposite direction of the little tiny fish traders out there who um, don't have much impact on the markets. So if we look at the overall amount of BTC held specifically by wallets that have 10 to 10,000 BTC, they've been growing actually quite significantly. So this is why I'm not overly concerned with this drop. I see that going back to February 4th, about roughly 10 weeks ago, they've accumulated just about 200,000 Bitcoin collectively over those past 10 weeks. That's massive. A little bit concerning is the fact that Tether and USD coin, they're going down. So clearly there's a lot of swapping of stable coins for Bitcoin at this time, but it's not crazy significant right now. And I still, the number one thing that I'm looking at right now is just the overall amount of Bitcoin held, and it's still going in the right direction to me. So when you see price go like this, but Bitcoin whales kind of, I don't know, just drawing from here, they're going like this. I'll even make it a little longer term. So this is from the all-time high back on March 14th to, let's say, right about there. Yeah, whales and sharks are moving up, getting more of the coins that people are shedding as they panic sell as prices are going down. So that's a good combination that tells me, the dust will eventually settle and the patient traders will likely come out on top here. Yeah, if whales are converting stablecoins into BTC, that's absolutely a bullish event. You saw, especially here in February, when Bitcoin accumulation started to go nuts. Stablecoins were going down, Bitcoin was moving up, and boom, you see an all-time high occur shortly after. Uh, Sometimes there are instances where they're both going down together. Stablecoins here in red and blue, and Bitcoin in terms of its percentage in bright green and overall amount of Bitcoin in dark green. That usually leads to drops like what we saw in mid-August, a couple of months before prices, the bull run basically started. Um, this to me was kind of an anomaly here when we looked at October and we saw that Bitcoin was going down along with stablecoins, even though Bitcoin's price was going up. It was a weird situation where everyone was waiting for the ETFs. There were a lot of false narratives coming out. If you remember the news publication that posted like a few weeks early about the ETFs being released, and they were wrong about it, and they had to apologize. Like there were some weird things going on here, but normally, if these lines are moving the same direction altogether, prices usually go down, and if they're moving up together, prices are usually going up. But if you see kind of a split like we've been seeing lately, where whales are going up and stable coins are going down, favor the Bitcoin. The Bitcoin is going to matter a bit more in this kind of situation. And it just look at it as kind of an ultra bullish signal if you see both going up together. So, like if we go back to 2021, we see right here, for example, June of 2021 up until, let's say, August, huge rebound as new fiat here was coming in, moving into crypto, whether it was stable coins or Bitcoin, a lot of whales were deciding this was the dip to buy back when we were at around 32K or so. We got as low as 29K. And then prices just absolutely take off because this was a sign that it wasn't just stable coins converting to Bitcoin. This was fiat moving into stable coins and then stable coins also going into Bitcoin. So that's ideal. And then when you saw all of them start to go down, yeah, prices followed pretty steadily. This was a very good alpha uh, indicator as to where markets were going to go next. So for now, going back to let's say the last 3 months, I think we're fine. I think we're fine as long as this dark green line is still going up, and hopefully stable coins go up as well, indicating that there's some money coming in from bank accounts into crypto, meaning there's fresh market cap being produced in cryptocurrency once again. Yep. Yeah. Yeah, you nailed it. More money in crypto in general is a good thing, whether it's in stables or Bitcoin. But if you had to choose one, you want to see stables going into Bitcoin in terms of whale wallets specifically, uh, because that's just an indication that Bitcoin's network is pumping, and as Bitcoin is being bought, some of that can funnel into altcoins, and then just non-stablecoin crypto market caps tend to expand from there. Right. Yeah, it's probably the number one chart that I'm checking on a daily basis to update the community. So I think it's vital that we just continue to see Bitcoin staying high in terms of the Shark and Wallet holdings right now. Also, seeing that the supply and exchanges is staying very low is very important. You see this big drop here that happened just prior to the all-time high. That was a good sign that we weren't going to see any imminent sell-offs. And sure enough, a week later, we see that all-time high. And overall, the amount of Bitcoin on exchanges is staying very low, meaning the likelihood of a major sell-off continues to be very low and risk-free. Yeah, this is the perpetual contract funding rate on various exchanges. We're looking at Binance, DYDX, Deribit, and BitMEX specifically. And going through them one at a time, we can see there's actually quite a few shorts. Let me zoom in here to like just the past week, past month. Yeah, funding rates are important because they're basically the ratio of longs, which are bets in favor of the market, versus shorts, which are bets against the market. And the ratio is looking at how many longs there are versus shorts. If there's a high ratio of longs, that means that longs are actually paying shorts in order to open up their margined and leveraged longs because they're feeling greedy and they want to get as much profit out of a bull run as they can. And that tends to be when markets correct because when there's a big extreme in one direction, markets are bound to try to liquidate those big leveraged uh, positions that are open. And that's exactly what happened here at the end of March. You see these huge spikes of longing followed by this big drop the next day, where prices actually fell below 65K for the first time in a while. So you want to see something more like what we're seeing now, which is a lot of shorts forming that indicate people are betting against the market and they're hoping that prices will go even lower. And if these shorts get liquidated, the money will basically be used as rocket fuel to push prices back up to above 65, even above 70, however many liquidations there are that are available, they'll be used to push prices up, assuming these shorts stay pretty prominent. But as you can see, this is the most frequent we've seen these shorts pop up in at least the past month. I can go back like 6 months and you'll probably not see a lot of shorts either. Maybe a few way back here at the beginning of January. But yeah, it's nothing like it is now. So that's DYDX. Deribit looks about neutral. BitMEX had some shorts going on, but they've kind of gone away for now. And Binance is still pretty neutral, but at the very least, we're not seeing any of this anymore. Not a lot of bright green and people that are optimistic about the markets, which probability wise increases the likelihood of markets going up now that it can do so with little resistance and not a lot of people getting rewarded on big margined and leveraged positions that they had open. Yep. That's right. Yeah. Markets tend to move the opposite direction of the crowd's expectation. And you'll often see funding rates be a good, capture of how the crowd is leaning. Sometimes you'll see a difference between how people are actually placing their bets in the markets versus the commentary, which you mentioned social volume, I'll show that. Um, we can just go weighted sentiment, which is a great social metric that captures the amount of discussion related to Bitcoin, as well as the ratio of positive versus negative comments related to Bitcoin. So if I look at that chart here, you'll mostly notice a similar trend. So super negative as markets were dropping uh, over the last couple of days, the 13th and 14th specifically. And it's kind of gone more neutral over the past 24 hours. But we want to see this. We want to see a lot of negativity and people doubting crypto because that's when we see these big bounces. And sure enough, when we saw this negativity the last couple of days, we immediately see a bounce, and then the crowd starts getting optimistic again. And as soon as they get optimistic, prices go down again. So it is counterintuitive. When we get into crypto, we assume that when everyone's bullish, they're willing the prices up, but it's actually the little traders that are getting crushed constantly and the whales and sharks dominating. So when you're seeing everyone else leaning very bullish, that's when prices are most likely to correct. When you're seeing everyone leaning very bearish, that's when you see prices most likely to bounce. And you see tons of examples just looking at this chart. Super bullish here on April 8th, immediate correction. Super bearish here, prices rebound. Super bearish here, prices rebound. Even super bearish here, prices rebound until everyone gets optimistic and then prices crash. It's like clockwork, and it's just how the markets ebb and flow, and you have to be on the opposite side of the extreme reactions if you want to make money. Yeah, man, I think that's accurate. You certainly can get some midterm value out of this if you're simply watching from the sidelines and seeing where extremes are forming in terms of traders' opinions. You can capitalize multiple times in the past month if you just track this chart by itself, and then supplementing it with things like funding rate and whale and shark behavior. You can quickly pick up on just a ton in terms of how people are perceiving markets, how it can be taken advantage of. You want to basically try to align yourself with the big key stakeholders and what they're doing, and avoid what the little guys are doing. Yeah, thanks for that, Trev. Yeah, I'll just kind of, I think this will be the last topic for today, and we'll do more maybe when we touch base again next week or 2 weeks from now. But we want to also note the fact that among our top trending tokens right now that we're tracking, Bitcoin and Ethereum are number one and two, and that's actually not normal. They may get the lion's share of discussion on a day to day basis, but in order to pop up on this trending coins page, they need to be getting an extreme amount of discussion, even compared to their normal expected discussion rates on a day to day basis. So, Bitcoin, for example, is being talked about a lot more because everyone's jumped off the altcoin train and they're now speculating whether they should, move their altcoins into Bitcoin or move their Bitcoin out of crypto completely and into fiat because we're about to see a big bear market and 2024 isn't the year that they thought it was going to be because of this correction. A lot of panic, even with the halving 3 days away. It's not enough to really excite people right now when they see this kind of price drop. You can see that the Hong Kong ETFs had their fun in the sun, but they're already kind of fizzling out in terms of excitement, which I think is due to the fact that prices have been dropping throughout this story. And unlike when everyone was getting hyped about the US ETFs in, October, November, and December, and prices were going way up, uh, the hype around this one, obviously Hong Kong is a lot smaller of a uh, region compared to the US and has less impact. But it's also, this news story has just been kind of buried due to the fact that markets have been bleeding like crazy while um, the Bitcoin and Ethereum ETFs were approved by Hong Kong just a little under 2 days ago. And Ethereum, it's the same thing. I mean, there are some exciting things. You can see the bullish summary here. Um, the approval of BTC and ETH ETFs in Hong Kong, the increasing demand for staked Ethereum, positive sentiment toward Ethereum NFTs. I don't know how big of a deal that is right now. NFTs are getting crushed, but you can also see the bearish explanation. Price struggling to recover above 3,200. It's actually down to 3,000. So this is maybe day old news now. Um, in a short Ethereum Gamma position, I believe that's a technical trader analysis. Recommendation from QCP Capital to deploy high convexity, zero downside risk strategies. It's all kind of in the weeds here, but the point is, BTC and Ethereum are being talked about a lot, mostly because of the absence of excitement related to altcoins, uh, which is new. Over the last 6 months, it's been kind of the altcoin party and which ones can we jump in on. But slowly but surely, as we corrected from the all time high 5 weeks ago, the narrative has shifted toward, we better stay in the big caps right now because the altcoins are all flushing down the toilet right now. So that's how I'm seeing it. Yeah, I actually don't think there's going to be a serious move in either direction. I think the past 6 months and that big bull run was mostly due to the anticipation of the ETFs and the halving. Those two big topics really drove a lot of optimism, not just from small traders, but from sharks and whales into the markets and wanted to get more exposure into crypto. And that, of course, led to great things and it's huge expanded market caps that we're still enjoying today compared to, the 30K levels that we were seeing 6 months ago. So we're still over twice the value that we were compared to then. But we want to be mindful of the fact that the actual event itself is already a foregone conclusion. And when something is a foregone conclusion and there's not really any feasible way that the halving won't happen, then the event itself is just kind of a null event. It just is the date in which we all knew that the difficulty for mining was going to be doubled, and the supply of Bitcoin will, for the next 4 years, be half as um, consistent in producing as it was the previous 4 years. So, with that said, uh, I don't think that the event itself is going to have any significant price impact unless the crowd, creates a self-fulfilling prophecy and they get super euphoric all of a sudden, and then the whales might just send the markets down because they have these opportunities to sell at 70K again, or they get super fearful and the whales will scoop up at 55 or 60K again. But the the price impact more or less has already happened just from the past 3 to 6 months of anticipation for this event that is a foregone conclusion. And I think it's going to be basically just more of the same. And we can look at the amount of fear going on combined with the amount of accumulation still going on with sharks and whales, and understand that the likely direction is just going to be based on those patterns continuing to form. And right now, I think it looks more like a bullish divergence than a bearish one. I don't think that April 19th is going to be the day that we suddenly go to the moon. It's happened before, so maybe it could, but I believe it's going to be more gradual than people expect. And if you're trying to make a play where you accumulate on the 18th and sell on the 20th, you're probably going to be wasting your time compared to simply just getting what you want to own now and then watching the price gradually go up, hopefully, knock on wood, over the next couple months. And then you can, take profit on what you will from there. No, always a pleasure, Trav. I think what you guys are doing are great, and I'm always happy to come on and talk markets with you guys. Looking forward to seeing what kind of questions and comments arise from what we talked about today, and just wishing everyone a safe and happy next week or two of trading until we catch up again. Thanks, Trav. Take care, guys.